We are moving on to the next topic, that is interest on debentures. We know that whenever the name of debentures is mentioned in the question, there will be an interest rate, a fixed rate of interest attached with that, like 10% debentures, 9% debentures, and we know that it is a fixed rate. It must be paid by the company. Even if they are having a loss, that means it is charged against profit. That all that we discussed in video number 1. We are going to discuss the journal entries for interest on debentures or debenture interest. This is an item which is payable by the company to debenture holders. So debenture holders are our creditors. So we have to credit their account. And it is to be given to debenture holders, so we will write to debenture holders, to whom we have to pay the amount. What are we paying? This debenture interest or interest on debenture, so that we have to debit. So this is the entry for debenture interest. Understood? Debenture interest account debtor to debenture holders. Interest is debited because for us this is being recorded in our books, in company's books, and for the company interest is an expense, so that must be debited. It's given to whom? To debenture holders. So you write the credit as debenture holders. That's a basic entry. Now there is a topic here, TDS, which you have to listen carefully. That is tax deducted at source. Tax deducted at source, that means at the time of income, at the time of earning income itself, it will be deducted. Tax will be deducted. TDS, tax deducted at source. Now we are giving this interest to whom? To the debenture holders. It is an income for debenture holders. So debenture holders will have to pay tax on their incomes. So they will have to pay tax on this interest also. But there are chances that they will try to escape from payment of tax. That word you know, that is tax evasion. So debenture holders may try to do tax evasion. They will not make the payment of tax. It is an income for them, not for the company. Okay. So to avoid all the situations, to avoid tax evasion, what the company can do is, company will take tax from the interest. Only the balance company will make the payment. Meaning is, suppose interest what you have to pay is 20,000. The tax rate is given, TDS is given at the rate of 10%, and we know that tax is to be computed on the income. This interest 20,000 is an income for debenture holders, and they will have to pay tax of how much? 20,000 into 10%, they will have to pay tax of 2,000. So they may try to do tax evasion. To avoid this, company will deduct 2,000 from this 20,000, and when you pay them, you will pay them only 18,000. Understood? This is the situation, or this is how the company is doing. Instead of paying 20, the company will take tax of 2,000, and only the balance company will pay to debenture holders. So there is no way for the debenture holders to escape from this tax payment. Okay, so that is the purpose behind this. They shouldn't do tax evasion. So company will deduct tax and balance will be given to debenture holders. Now, company has taken 2,000 from the interest amount, isn't it? From their income, company has taken 2,000. What is this 2,000? It's a tax amount which we have to pay. The company has to pay this 2,000 to the government. So this is becoming company's liability or company's responsibility to pay this 2,000 to government. Understood? That 2,000 is actually the debenture holders amount. It's not our amount. We have taken 2,000 from their amount, their interest only. But since that 2,000 is there with the company now, it is the responsibility or the liability of the company to pay this 2,000 to the government. Since it is your liability, that means company's liability, we will write it as to TDS payable. Why we are writing it as to TDS payable? Because it has become the liability of the company to pay this 2000 to the government. So this is actually a compound entry. Debenture interest debtor to debenture holders to TDS payable. How will you write the amounts? We will see that. Debenture interest, it's actually 20, but since we deducted 2000, debenture interest, the actual amount we will write. See, debenture interest is 20,000, the actual amount you write. Then we have taken a tax of 2000 and it is your liability, the company's liability. So we credited TDS payable and balance 18,000 we will give to debenture holders. This is how you have to write the entry. Debenture interest debtor to debenture holders to TDS payable. Okay, this is the due entry. We haven't given anything. When you write to debenture holders, meaning is they are our creditors. We have to pay all these. And TDS payable means we have to pay this to the government. So all these have become due. The next we will write the payment entry. So payment entry, when you write, what should move out from the company? The cash or bank. So 2 will be, the credit aspect will be cash or bank. Use the term bank. Okay, and what we have to debit is these two. We will pay debenture holders and we will pay the government also. So these two must be cancelled. So the entry will be, this is tax deducted at source, okay. Debenture holders account debtor, TDS payable account debtor to cash or bank. That is 18,000, 2,000 and 20,000. It means debenture holders will be given 18, TDS payable to total you will write as total you will write as 20. Did you understand how to write the amounts? Take the same amounts from the previous entry. So the journal entry for the payment is debenture holders debtor. We are cancelling these two. TDS payable debtor, then we will make the payment to bank. Then, so these two we cancelled. There is an account still there in the books which is debenture interest. It's an expense. You remember last year's P&L account, 11th standard, you learned P&L account where we debited all expenses, credited all incomes. So debenture interest, it's an expense which we are going to close now. It's opened or it's debited first. Now when you close, you have to give the opposite aspect, that is we'll credit it. So we'll write to debenture interest where you are going to close this into P&L. That means on P&L debit side, we'll write this debenture interest, big an expense. This is how you have to close interest account. So all three accounts we closed. Understood? The due entry, that is debenture interest debtor, to whom we are paying? To debenture holders. To TDS payable, that is to the government. That also becoming your liability, company's liability, though it is their amount. Then we will make the payment, that is debenture holders debtor, TDS payable debtor to bank. Finally, you close that debenture interest, statement of P&L debtor to debenture interest. We will work out one question. So only 3 entries in this portion. Then debenture interest, the nature of debenture interest is that also sometimes they will ask for 1 mark question. The nature of debenture interest is, it is a finance cost. Finance cost means cost associated with borrowings. See, we had to pay the debenture interest because we borrowed some amount from the public, from the debenture holders. That is why we have to pay the debenture interest. So this interest, this is an expense or cost associated with borrowings. Such costs are known as finance cost. Nature of debenture interest is finance cost. For 1 mark question, they might ask you this. We will work out illustration 33 now. Time Sports Limited issued 15,000, 10% debentures of 100 each. On 1st April, the date is given so that you have to consider it. The issue was fully subscribed. Whenever you do interest and all, the period must be considered. So dates are important. The issue was fully subscribed, so neither oversubscription nor undersubscription. According to the terms of issue, interest is payable on half yearly basis. So they issued on 1st April. So after how many months you will pay this amount? You have to pay after 6 months. Every 6 months you will pay, and 2 times you will have to pay in 1 year. It is half yearly basis. So April, starting from April, since it is 1st April, May, June, July, August, September. So you will make the payment on September 30th or October 1st also you can write, both are same. Then again after 6 months. So after September it's October, November, December, January, February, March. So next will be on 31st March. So these are the 2 times you have to make the payment. So you have to repeat these entries. Understood? Since it is half yearly, you will have to repeat it 2 times. Past journal entries for interest on debentures for the year ended 31st March 2020. That means 2 times you have to write. Till 31st March you have to write. Ignore TDS, tax deducted at source. TDS you don't have to include now. So we will just write the basic entry. Basic entry for debenture interest. Okay, don't write that bank to debenture application and all. Here they are asking the debenture interest entry. The first entry, what's the entry? Debenture interest account, debtor, to whom we are paying? To debenture holders. Write the narration. Then what's the date you are going to write? When are you going to make the payment? This is not the payment entry, this is due entry. When it will become due? Every 6 months. So the date is September 30th, 2019. Yes. Okay. Now how will you write the amount? Interest you have to compute. It's not given in the question directly. You issued 15,000 debentures. That is the number, not the amount. Don't go and compute 10% on 15,000. That is just the number of debentures. Okay, 10% debentures of 100 each. What you have to remember is, one point you write with the meaning, debenture interest always must be computed on total face value. That is very much important. The premium, the discount, nothing will be considered. Interest will be always computed on the total face value. Okay. So in this question, what is the total face value? Per value is 100, isn't it? So the face value of one debenture is 100. We need to consider the total face value. That means it will be 15,000 debentures into 100. This is the total face value. That is 15 lakhs is the total face value. On this, you are considering the interest rate of 10%. The calculation is not over because we are not going to make the payment for 1 year. We are just doing for 6 months now, since it is half yearly. So you must consider the period 6/12. So what we did now is always compute 10% on total face value. Face value of a debenture is 100. Total means you have to multiply by the number of debentures. So 15,000 into 100, 15 lakhs is total face value. On that compute 10%, that means it becomes 1,50,000. Consider the period, since we are doing for half yearly, so into 6/12. So half of 1,50,000 is the answer. It is 75,000. Understood how to get the interest? Then we will make the payment. There is no TDS, so it's easy. You write the payment entry, that is debenture holders account, debtor to bank. How much you will pay? The due amount, the same thing we will pay now, and it is half yearly. So again you have to repeat these because we just finished 6 months. Again 6 more months are there. So the next due entry, okay, there is one closing entry that you learned, that is debenture interest closing entry. Statement of P&L to debenture interest. That closing entry we will write at the end of the year. Now we are in September. On 31st March, after you again write these 2 entries, we will write the closing entry. So once again you have to repeat these entries because We are doing for half yearly. This is 2020 31st March. We will write the due entry again. Debenture interest account debtor to debenture holders. The amount will be same because again for 6 months you have to compute, means it is the same. Since it is half yearly, the amount is same. Then the payment entry you have to write, but if you see the textbook answer, they haven't written the payment entry. After this they have written that closing entry, but you write the payment entry. They have written an alternative option there. They have assumed that it has become due, but the company did not make the payment. That's what they have assumed. So they didn't write the payment entry, but you write it. No need to make it confused. You write the payment entry, the same date you write the payment entry. Debenture holders account, debtor to bank account. Same amount, 75,000 we paid. So completely we made the payment. Okay. Next we'll close that debenture interest. And that date is also March 31st, 2020. Closing entry will be statement of, always closing entry to be written at the end of the year. Debtor to debenture interest. Now how much we are going to write debenture interest? Is it simply 75? No. For 2 years you have, for two half yearly, that means 2 times in a year you have paid 75,000. That means altogether the debenture interest is actually 1,50,000. When you close you have to write the total. So this is how you have to do that debenture interest question. This you have to add and write. For 1 year it will become 1,50,000. Next we will work out illustration 34, the very next question. Issued 2,000 debentures of 100 each. So what is the total face value? It will be 2,000 into 100. On that we will compute the interest, that is 12%. 2,000 into 100 means 2 lakhs. Into 12% means 2 lakh into 12 by 100, that will be 12 to 24,000. Then issue was fully subscribed, neither over nor under. According to the terms of issue, interest is payable again half yearly. The dates are specifically mentioned. There is TDS, did you see, tax deducted at source 10%. Again the same entries but with TDS. Journal entry is related to debenture interest for half yearly. 31st March 2013 is the year given, and we are starting with 2012, and transfer of interest to statement of P&L. The closing entry also we have to write. So same like this but with TDS. Illustration 34. The first one is the date you write, September 30th 2012 is the year. Debenture interest account debtor to debenture holders, and there is one more item, to TDS payable. Amounts you must write very carefully. Debenture interest compute on the total face value, that is 2,000 into 100 into 12% is the rate of interest. Consider the time period always, that is into 6 by 12. So 2 lakhs into 12% we got 24,000. Half means the debenture interest is actually 12,000. Now you write TDS payable. What is TDS rate? Tax deducted at source 10%. The tax you must compute on the interest, because this is the income for debenture holders, this interest. So tax you have to compute on this interest. Interest is 12,000. On that compute tax of 10%, that is 1,200 is your tax payable. The balance you can write for debenture holders, that is 10,800. 12,000 minus 1,200. you can write to debenture holders. Next is again on September 30th we will make the payment. So that is these two accounts you have to cancel, debenture holders account debtor, TDS payable account debtor to bank account. Debenture holders, take the same amount from the previous entry, it is 10,800. Then TDS payable 1,200 and write the total for bank, which is 12,000. This is how you have to write the amounts. Then we will repeat these two entries again since it is half yearly. Again on 31st March 2013 you have to repeat these, that is debenture interest account debtor to debenture holders to TDS payable. Same, copy paste the first entry, you copy paste here 12,000, 10,800, 1,200. No more calculations needed, it would be the same. The next is payment entry. In the textbook for this question they have written the payment entry. You don't have to get confused everywhere, you write the payment entry. For 31st March also you write the payment entry. In case they specifically say like they haven't paid at the end of the year, don't write, or else you can write debenture holders account debtor, TDS payable account debtor to bank account. Again the same you can write. So the payment entry is also over. Now we will close debenture interest account. So the entry would be statement of P&L account debtor to debenture interest. How much will you write here? Are you going to write the amount 12,000? That 12,000 is the interest for 6 months. When you write at the end of the year, that is date here is 2013 31st March, you have to consider 1 year interest. That is 12 plus 12, 24,000 you have to close to P&L account. Okay, only 2 questions given from that portion, that is enough. So with TDS and without TDS we did. You understand the concept first, don't by heart. If you understand the concept, one thing is you will not remember the entries. Second thing is you can write the amounts easily. Otherwise, even if you by heart entries, you won't be able to write amounts. So without amounts you will not get marks. For simply writing entries you will not get any marks. So understand the concept, then you work out this question.